welcome. Thanks for joining us for another week of market review here at Maxi. I'm Max, and this is Sid, and we're gonna dive in this week looking at the DXY for a change. Last few weeks we've been starting out with crypto or the SPY, but this week let's look at the DXY. So we have the DXY pulled up. The DXY is the chart that tracks the United States dollar, the US dollar index. So basically, as the DXY increases, the strength of the dollar increases, and generally speaking, equities sell off as people, move into the strong dollar. As the DXY sells off or decreases and moves down, usually equities do well. Stocks and cryptocurrencies soar as people move away from the weakening dollar into assets like these equity markets. So what you have pulled up here is actually an example of a Wyckoff redistribution, and that's kind of what we're seeing. At least that's what it's starting to look like here on the daily chart, and you can see that the market down is the way that the Wyckoff distribution pattern plays out. So we're looking for this pattern to play out.
I think it's a weekly chart. Yeah.
Oh, you're right.
It's the weekly chart. Yeah. But yeah, you're right. Like the distribution schematic, like this is what we have for reference on the right side. Usually, I mean, it can be variations of, how it needn't exactly look like this. But the point being is like you kind of have three highs. So this would be 1, 2, 3. So 3 highs. And then like after the third high, you get you try to make another high. The price tries to make another high. In this case, it got rejected on our strength band, our indicator strength band. So this is our custom indicator, and we've said this in the past. The way it works is that usually in a bull trend, it acts as support. So you can see here how it acted as support and price just kept going up. And in a bearish trend, it tends to act as resistance.
Yeah.
So it got rejected there.
It's interesting to see that breakout too there at the UTAD section of the redistribution.
Oh yeah, here. Yeah, you can see that's like this is typically a range, and then this just it breaks out. It's a fake breakout to basically trap all the bulls.
Yeah. It's fun to see that in the schematic. You can see that it is like a breakout of the upper limit of the range, and then it's visualized. Those ranges are visualized by our indicator, where it flipped to green when it broke the upper range of that. So it very much is looking like this Wyckoff redistribution, and you can see that even more recently, where we did get our bear print on the weekly, and then when we did retest the strength band, we were rejected. Even if we know nothing about technical analysis patterns or Wyckoff distribution patterns, just using the indicator would have been the perfect call to enter a short position on dollars or go long equities, where you see it with the bear print, with the indicator having the red band color, so the bear print matches the color of the band, and we're being rejected. That is kind of like basically that would be the start of the market down. So then it's just fun to see it like side by side here with the textbook example of the image, because it's really kind of clean at least from what I'm looking. It looks very one-to-one, like very textbook right now.
For me too. Like it looks so really similar. I think like the fall off confirmation happens, I think, after we lose the support. Like you see the bottom of this range, which kind of acts as support. So like this is actually the $100 price. Like 100 has been a support for quite a while. I think. So you can see wick here, wick here, wick here again. So I think like if it loses 100, then I think then the markdown phase is going to happen, where the sell-off accelerates.
Yeah, so and that will be wonderful for us in the stock markets and in the crypto markets, because as the DXY, like we said, starts to sell off, people are going to be using their money to buy into equity assets. And so generally speaking, there is that inverted relationship between the DXY and the equity markets.
Yeah, so we're going to keep checking on this and track to see how the DXY is doing.
Mm-hmm.
On other news, I know like what's the fund called? Is it called the BTFP? You know, the Fed has their fund to basically increase liquidity for the banks to tap
Oh,
cash into,
yes.
and that's
Coming to an
running
end.
out
Yeah.
actually on Monday.
Yeah, that's a big news.
Uh,
And
the
like,
coming week.
a lot of small banks are still kind of feeling the strife and are still a little bit in trouble. And we've been,
Yeah.
so yeah, like you're saying, there's basically big
Yeah.
banking. So the thing that Sid is talking about, I'm also not 100% sure what the acronym is, but what it is it's basically an additional lending program that was implemented by the FCC, uh, by the FDIC rather, during COVID kind of era, to get the Federal Reserve to make it more simple for smaller banks to have access to liquid money or liquidity, because a lot of banks were having like liquidity crunches, and there was bank failure worries, especially around the time that we saw like Silicon Valley Bank go belly up.
Yeah,
Uh,
Signature. I think that was
not
the
too
other
long
one.
ago, and so those lending basically allowances have been made a lot easier and more lax, so that little banks have a little bit more runway and can stay in business, and those lax allowances are going away, and it's going to be back to business as usual. While a lot of these banks, I don't think, are ready for that. And so we were tracking here on the right, you can see the chart for New York Community Bank, where we were
I think
looking.
they're the ones who actually bought out Signature or one of the failed banks before.
That didn't go so
So
well.
they're the ones who acquired or bailed them out and then took on all the additional debt. And of course, these guys now, like you can
Yeah.
see this big gap down. But we were, for our members, let me turn on the volume so you can see. But there was a bearish pennant pattern.
Yeah.
You can see this like wedge here. And I measured the flagpole, which is like from where the candle starts all the way down here. And then I basically copied the line to the right, which actually so the price was anyway going to test our indicator strength band.
Yep.
That was going to happen. So it retested to around there. And then, of course, then it dropped sharply. And we had a lot of puts.
A lot is so
and
ridiculous. It's
we made
literally
solid profit.
the day before that drop. We were posting in the Discord, like before markets closed, we were like, "Hey, look at this pennant. Like this is looking like we're gonna close this gap." And I literally bought my put options the day before it dropped down like 46% the next day. They halted trading and everything. It was like a
halted trading, yeah,
collapse event.
This was. Yeah, it was like huge, and it wicked exactly to where our target was, and then I think there was news that they might be bailed out, and then wicked back up,
all the way back up,
and
instantly.
but then it closed bearish. Like that looks kind of bearish on. This is a daily chart for the bank, so I don't know if it's again gonna start its next downtrend.
I still have a couple of my contracts open, because when they halted trading, I was stuck holding onto it, even though I was deep in profit. I wasn't able to.
You couldn't.
That was really irritating. Yeah. So I still have a few contracts. I'm already like more than double what I started with. My principal has been recovered, so it is effectively house money at this point. But I was definitely a little irritated to see them halt trading, and that again is like, not the first time.
That doesn't happen with crypto.
Exactly. It's not the first time I've seen this happening on the stock market, but not on the crypto markets. And I guess that's a great transition to like jumping over to like Bitcoin and Ethereum now. So first of all, crypto markets never close. And when we're on the crypto markets, we're dealing with a public blockchain, and there isn't, some authority that could be like, oh, the trading's been halted. That's never going to happen when you do this kind of stuff on the blockchain. So again, I mean, I'm obviously a little bit biased because I'm really a big time crypto fan, but it's something that it really frustrates me when we do the research, we call the correct direction, we set not just the right, short sell position, but literally with correct targets for take profit orders, and those orders don't fill because trading was halted. I mean, that it makes me feel it makes me feel as an investor like I'm not playing on an even playing field, because somebody's able to fill these orders, and the fact that I'm being blocked out, I don't like that idea. So again,
retail.
in crypto, we're all on the same, you know, footing here. And even if I have $1 billion, it doesn't give me any ability to limit your access with your $50. And that's how it should
Right.
be. So, you know, looking back over at the crypto markets, you can see
Yeah.
we made it almost all the way to the top of the target that we had drawn out there for Bitcoin. We have started pulling back a little bit here on the daily. It's still obviously
because understandably, because like
yeah, for sure.
$69,000, 69K was the last all-time high. So you can see, you know, you're gonna face some turbulence, and that's what Bitcoin is. You know, it wicked back down, and yeah, we drew this target out when it was still playing this bull pennant, when price was chopped, you know, grinding before takeoff. And of course, like, it doesn't go up in a straight line, as you can see. So it can retest, you know, pull back, and then like continue going up. Ethereum hit the target exactly. Like, and now it just seems a little toppy. Not sure how low it'll go. I mean, we'll have to check the weekly, but Bitcoin still has, I think the price is what's around 73K. So that would essentially be new highs. To hit the target. We're 3/4 there. So
exactly, and it's expected to get a little bit of these pullbacks, especially when we are, like you're saying, we're hitting new all-time highs. A really good way to think about that, you know, when it's like, well, why would it start falling when it's taking off? Well, it's because literally every single person, entity, investor, whatever you want, anybody who's ever bought Bitcoin at that point is in profit. You know, when you hit an all-time high. So then it's like anybody who would like to realize profits is now incentivized to sell. And so these new all-time highs, especially when they're first happening, the first time in a long time that we're seeing Bitcoin hit an all-time high, this brings a lot of profit takers out of the woodwork. And that, you know, this price range, we should expect to find at least a little bit of resistance. So this isn't this isn't like, exactly. This isn't
nothing to worry about yet.
Yeah, exactly. Nothing to worry about. Expected volatility, and it's very bullish still. You know, it's easy to see a 5 or 10% drop in price and being like, oh my God, the sky is falling. But then you zoom out a little bit, like you just did, and we're up 200%.
You know,
you
know, like the last weekly candle close was like bullish. And technically, you look at this, like Bitcoin did close weekly higher, like past the you can see the last body was like, that's still bullish. So it could be just that it's pulling back to retest this the last weekly high, and then SR flipping it or
build us a base, like build some base for takeoff there. Let everybody who wants to take profits initially and be shooken out of this, let them sell their stuff, and before we make our next push up. That's generally how these markets are gonna like react. We also are coming up on the halving event here. End of April is still kind of the tentative date for that. So a lot of investors, you know, this is a known event. We know this is coming, but you know, a lot of investors are expecting a little bit of a pullback and a cool off after the actual event. So this is similar to the
a little bit of a sell the news.
Yeah, exactly. So similar, if you remember the ETF stuff. So remember the ETF before they were all approved, we got a really nice run up, and then right when we got the news of it, like with that week following the news of the ETF approval, we cooled off. We chilled out a little bit, and so it seems a little counterintuitive. But in the investing world, there's always that saying, like you said, buy the rumor, sell the news. So this could be another one of these sell the news events, you know, where everyone's already aware of it, but right when it actually happens, we do get a little bit of a pullback. That is what a lot of chatter and people do expect, but we'll have to see, because you know, there's a lot more money in these markets now, a lot more institutional players than there was last cycle, and so it's hard to know if this is going to play out exactly the same way as before. And that's why we just follow the chart. So week by week, the pictures change.
We take it week by week, day by day, week by week. Yeah,
exactly. And then, you know, I mean, we make our videos like this week by week. So when you guys are joining in to watch what we're looking at, we're able to give a little bit of a broader, you know, weekly kind of assessment of what we're seeing happening or playing out. But then within our own Discord and for our members, we're doing this kind of like on a day by day basis, like seeing how the picture is developing and giving a bit of insight on, you know, what is potentially to come should those trends continue the way they're currently developing. So that's kind of like the beauty of joining Maxi, jumping in the Discord, getting kind of like a constant feed of like updates and analysis of these markets as they're changing, because as you can see, they're always changing, constantly. And like even there, we see on the Ethereum side there, you see that big dip where we got the bear print and then immediately it jumped back up. That was in our Discord. That was, there's quite a few people saying like, oh, it's like, is this the top or whatever? And we're like, this is the buy the dip opportunity, like time to buy.
Yeah, it was buy the dip. We bought hard. Like when BTC like crashed here, like around here, like it wicked back down and we were like, no, it's buy the dip.
Yeah, so we bought.
And that's what happened. Like you can see, even the indicator, it had a bear print, but the band didn't change color to match it. So that also showed us that it's sort of like a bear trap.
Exactly. And we actually called it, not only like were we able to do that from our indicator, so if you were doing this kind of by yourself, you could still do the same, just watching the indicator and following that way. But we were also then directly, it's like, hey, this is our we're like, this is our opportunity to buy the dip. So anybody who's looking to enter the market or hasn't yet, maybe buy the dip. And people did very well who did jumped in on the dip buying, and
because like BTC went up like 14%.
Yeah.
Oh, even if you take the wick, right?
Oh, take it from the wick to the wick.
So that's like 17-18% Bitcoin. And then Ethereum, I think, was more. Yep. 25%.
Yeah, big swings. And then, of course, there's also options to do this with leverage or to do this with like derivative assets like options.
That's what we were doing.
And so yeah, exactly. Yeah. So we were showing people not just like the timing, but also the vehicles that can maximize these profits. Some people don't want to maintain.
Maximize.
Exactly. Yeah. Some people don't want to maintain their own margins, for example, for a collateralized leverage position. So then those people maybe are more interested in holding option contracts that don't have liquidation prices. And, there's all these different abilities to do that, not just directly on the blockchain, which is obviously my favorite thing, but also from your broker account or even at this point from your IRA account. And so we were...
Yeah, because there are ETFs available.
Yeah, so we were participating across the market here. It's been really kind of exciting. But right now what it looks like is, we are kind of getting a cool off. It doesn't look fully bullish or bearish yet. When we looked at the weekly close, it's like just kind of normal volatility here. It could turn bearish, and that's obviously why we're going to keep an eye on it every day, and we'll be updating our members as we go. And of course next week we'll take a look and see what's developed for our next video. But it's definitely expected volatility. Let's not fall into the trap of like, oh no, 10% loss means it's terrible. Let's like keep perspective, zoom out, understand that like a 10% pullback after an 80% run up is totally normal behavior. Yeah, absolutely fine. And and we've had a few members too who are like in the chats who are like, oh, should I be doing this? And it's like, and then just talking about it, being like, yes, this is expected. It's like, okay, cool. Then I'm not going to make mistakes. I'm not going to like be emotional and start like selling my whole stack here. And it was funny. I think the direct quote somebody in chat said is, it's like, cool. It's like I was feeling antsy about doing something with my crypto because I haven't been doing it.
I was
and then he's like,
first they were feeling FOMO when price was going up.
Yeah.
And then they were feeling worried, antsy when it looked like it was like,
and they were like
dropping here.
They were like, just talking about it, it feels like I'm doing something. So that was good. And I was like, yes, exactly. So if you're somebody
that's what the community
exactly. So if you're somebody who wants to get into these markets and maybe wants a little bit of that like community support on like, hey, I'm thinking about doing this. What do you guys think? That's a valuable thing just to kind of get a sanity check, so you're not dealing with all this stuff in a vacuum. And, it's good to keep sanity when, you've seen like the meme coins, for example, this last month have also been like up 300 to 600%. And when you're actually doing that well in a month, you could go you could use a sanity check. You could use somebody telling you, it's like, hey, why not take your principal off table, even if you are, printing money left and right. So that's what we're here for. If that's something you'd like, jump over to maxi.io, sign up. We got a first month free. If you don't like what you see, then no harm, no foul. And if you do, we're glad to have you join the conversation and start making some gains alongside with us. And until we see you there, then we'll see you on our next YouTube video. but let's keep an eye on these markets. And let's see how this trend develops. So we're definitely, just a quick recap here, looking at the DXY. We're looking for that Wyckoff distribution to play out. If that does start to play out, then we're looking, the dollar to weaken, and we would expect to see our crypto and our stock equity assets continue to climb. And so that's also why, it's a little early here to see this kind of turn down, being like, oh, this is the start of a reversal in the trend. This is absolutely not that yet. It doesn't mean it's not that.
Yeah.
It could be that, but yet it's too early to say. So we're going to have to keep an eye on all that. And again, seeing that DXY with, signaling that Wyckoff distribution, that's a very bullish indicator for our crypto and for our stocks. So, with those kind of combined technical analysis points, we're going to keep an eye and move forward here, and take a look at what develops. But we're not going to get shaken out just because, the last couple days have been red after we've had multiple months of green. That's that's not the way you maximize profits, and that's not the way you trade and stick to plan. So, until we see the trend change, we're going to keep following the charts and trading this stuff. And we hope to see you joining us. So we'll see you next time. And otherwise, we'll see you over in Discord and at maxi.io.